Will, what's up?
Hey guys, sorry I have myself muted. What's going on?
Not much. How
Happy
are you?
Friday. Good, good. First week of class this week, pretty much just syllabus week, so didn't do much, but hanging in there with the school stuff. But other than that, man, interesting week in Bitcoin. So ready to get into it.
We're going to get into Bitcoin, but we want a school update first. We saw a tweet where you were in class and they were teaching you about a 60-40 portfolio, and you were laughing. What was going on?
It was, I was cringing inside. It was tough to sit through that. Learning about allocating your money to negative yielding bonds isn't really exciting to me. But it is what it is. At least I'm enjoying my history class.
All right, let's jump into on-chain metrics. First up is we have the total supply held by long-term holders. What's going on here?
Yeah, so last week and following this week, we've reached new all-time highs in the amount of Bitcoin that long-term holders possess. Which is obviously a really good sign because long-term holders historically kind of set the floor. When you look at this as just a percentage of circulating supply, it's about 68%, 67.7 if you want to be exact. And then when you use, instead of circulating supply as the denominator, if you use adjusted supply, which is factoring out lost coins. And so just for listeners, Glassnode just uses a 7-year threshold. So over that, they consider those coins lost. And so using that as the denominator, you're looking at 84.5% of adjusted supply. But yeah, so point is, long-term holders are buying like crazy here. Not only that, but they're also, we're also seeing short-term holders aging past that 155-day threshold. And that's shown by HODL waves. So what you see is that in the smaller portions, the younger portions of coins. So, when you look at below 6 months, those are going down while you're starting to see a larger portion go into those 3 to 6 month, 6 to 12 month, 1 to 2 year cohorts. So you're starting to see not only just long-term holders buying here, but also the investors, the entities that came on the network 3 to 6 months ago are now starting to age into that long-term cohort. So the combination of both of those things is why you're seeing this new all-time high.
Got it. And so when we start thinking about the short-term holder, long-term holder percentage, we're seeing basically the exact same thing, right?
I'm sorry, what'd you say?
The
kind of cut off there, dude.
The short-term holder, long-term holder percentage is basically the exact same thing?
Yeah, exactly. It's just, looking at the percentage of supply held by long-term holders, both in terms of circulating supply and the adjusted supply.
All right. And so we've got the realized cap HODL waves. Explain to everyone what this is, and then what are you seeing in the actual numbers?
Yeah, this is just illustrating that not only is it long-term holders that are buying that's contributing to the increase in their supply, but also cohorts that are aging into that 155-day threshold. And so you can see that here with the HODL waves that the smaller, or I should say younger cohorts are going down while the older ones are moving up. So you're seeing the aging of those coins into the upper threshold. So for example, a coin in the 1 week to 1 month threshold is not moved. So now it's moving into the 1 month to 3 month and et cetera. So you're starting to see strong maturation, which is a good sign. People are coming on the network, buying their coins and holding them strong.
Spent output age bands.
Yeah, this is just looking at different cohorts of age and the percentage of outputs that came from that specific cohort, if that makes sense. So what I have been looking for is, are these long-term holders taking exit liquidity? That would be concerning to me. And we did actually get a spike up to like 18.75%. That seems to kind of have been a one-off thing. And that spike was really in 3 to 5 year holders and 2 to 3 years as well. But since then, that's cooled off now that we're back down to 3.4% as of yesterday. So it seems like so far that was just a one-off thing, that some of these longer term holders were briefly taking profits. But just watching this closely to see if this kind of becomes a trend. On Tuesday, I sent out a newsletter, and I basically just said, hey, look, I'm feeling kind of cautious here. When we had this, failed breakout above 50K, kind of got rejected there. That in confluence with, seeing some coins coming out to exchanges, a drop in a liquid supply, and then also some of this selling from longer term holders, kind of taking profits on into the rally, which isn't completely unexpected. I was kind of suspecting we saw some short term, price correction, and we did go down to about whatever 46,300, but it seems like we kind of found a local bottom there. I tweeted something about that yesterday, but now today it seems like Jay Powell has kind of given us the juice to maybe start heading back upwards. We're also seeing a tick back up in both the exchange flows, so coins are moving back out of exchanges again, and then also the liquid supply has moved back up. So kind of the concerns that I had there in the letter I sent out Tuesday have kind of been alleviated.
The entity adjusted ASOL seems to be showing a pretty rapid recovery as well last couple of days.
Yeah, this is very similar to the spin output age bands. It's looking at, once again, like the average age of the coins being sold. And so what you don't want to see here is what, if you look back at late 2017 or early 2018, you see that big spike after all-time highs when we started. It's a little off because it's a moving average, but that spike really came on the dead cat bounce, which is actually a little bit to the right in the chart. But point is, once again, you don't want to see everybody jump ship. It's not, it's completely expected to see people taking profits on the move up, but don't want to see everyone just sell out at once. And so, you'll see all the way on the right hand of the screen, we're starting to get this move back up in ASOL, but, kind of just monitoring this day to day, want to make sure we don't see any massive move up in that that would tell me that, everybody is abandoning ship kind of like late 2017.
Got it. And so then when we start to look at things like the futures dominance, obviously this shows how much kind of leverage is in the system or is one indicator of that. Explain what you're seeing here.
Yeah, so most people like to look at funding to say, okay, funding is positive, so price has to go down. Funding's negative, so price has to go up. Like I think there's a little bit more nuance than that. So like funding is slightly positive, which in theory, when you have prolonged positive funding, that tends to be a bearish thing. When you have prolonged negative funding, that tends to be a bullish thing. But that doesn't necessarily mean every time funding is positive, price is going to go down or vice versa. We had like 6 months of prolonged positive funding towards the late last year, early this year. There's several things here to kind of unpack. Like firstly, funding is, although it is slightly positive, it's nowhere near where it was earlier this year at similar price levels. Also, when you look at what you just mentioned about the open interest dominance, this is just comparing open interest to market cap and just taking like a basic ratio of that. And so when open interest really is insignificant compared to market cap, the odds of futures having a real effect on the price is lower. Not to say that it's impossible that we get a squeeze, but I think the chances are a lot lower than many people are saying. Also, that the red line that in the chart you just had popped up, that's the leverage ratio. So it's just looking at open interest compared to how many coins are on that specific exchange to kind of get a ballpark as to like how collateralized traders are. Both of these things are still kind of mild. So I don't think we get any crazy, short or long squeezes.
Got it. And then when we start to actually go into like net realized profit loss or realized profit, realized loss, you've got this kind of 4-part chart. What exactly are you looking at here? What are you seeing?
Yeah, so in the top left, you have the net realized profit loss, so the difference between the two. On the right, and the top right, you've realized profits, bottom left, realized losses, and then bottom right is the percent of addresses that are in profit. So what I'm looking for is, like we touched on earlier, it's to be expected that you're going to see profits taken on the way up. That's what happens in bull markets. Long-term holders distribute into strength. But what I don't want to see is the overhead supply start to come onto the market. And so, we had this really large distribution zone between 50, 60K. We chopped around for whatever, 2-3 months before we started moving down. And what you don't want to see is that overhead supply start to come onto the market and add in additional sell pressure. So I'm watching realized losses to see if those coins from above are starting to move down here, which doesn't seem to be the case. It seems to be mostly just realized profits, which is a good sign. Also, the percentage of addresses in profit is kind of important because the longer that the market stays below people's cost basis, the more likely they are to capitulate, in theory. So the fact that we've gone up from 69% at the lows to 86% of addresses now in profit is a really good sign. Yeah, I'd like to see continuation of that. And then like kind of on a similar note, looking at SOPR, this is once again looking at the profit taking of coins. We're back above the one threshold, which means the market's trading in a state of profit, which is once again a really good thing. And so this is the weekly version that I threw in the newsletter, but also if you look at the daily version, we got a bounce off of one, whatever, 2 days ago when we had this little mini correction, which is a good sign because it's showing that investors aren't willing to sell at a loss. So kind of using those things in tandem, but SOPR is a good gauge to say, okay, like are investors, are market participants willing to start selling at a loss? Do they want to get out of the market that bad? It doesn't seem like that so far because we've gotten a bounce off of one twice over the last 2 weeks.
Got it. And then when you start to look at the transaction volumes, I know that at one point you were a little worried because it seemed like the number of transactions was trending downward. It seems like those are recovering.
Like slightly, but I'm still a little concerned about it because it's pretty much just ghost town. I mean, we've gotten off the lows that we were at last month, but when you look at like the transaction fees, which is a good kind of proxy for block space demand, that continues to move down. The number of transactions and also the active addresses that's kind of moved up a little bit, but still nothing that the way I worded it in the newsletter was we've had a big swing in price, but no ding yet in transaction activity. So I want to see some follow through on that. Some people have been saying that it's because of all small transactions are moving to Lightning Network, which is possible, but I think there's no real way to exactly quantify that. So it's hard to say. And then also we are seeing really strong hodling behavior. So, it could partially have something to do with that. People just don't want to transact their BTC, and we're just seeing people, buying and holding their coins. Like when you think about the network, do you think of, this is just a rhetorical question for listeners. Do you think of usage of the network as transactional activity, or do you think of it as hodling, right? I guess some people have different answers. Some people say it's a combination of both. I personally think the Bitcoin networks, considering usage of it would be hodling. And if you think of it that way, you're seeing usage of the network at all-time highs. But if you are considering it using transactional information, then we are kind of in this kind of stalemate ghost town where, it is a bit concerning to see and something you definitely kind of want to see pick up over the next couple of weeks if we get more price continuation.
Makes sense. Exchange net position change, basically how much Bitcoin's on the exchanges versus not. What are you seeing?
Yeah, so we got another little dashboard 4-chart thing here. Top left, like you said, is the net position change. So looking at the 30-day change between a month ago today and now. Top right is just a raw balance on exchanges. Bottom left is a balance on Coinbase. Bottom right is balance on Binance. And so what you see is that exchange flows had gone kind of flat and put that in the newsletter last week. And the one I set out Tuesday was suggesting caution was when we had started to see net inflows to exchanges, which once again suggested that people had started to take profits on the rally. And then about 2 days ago, we saw this down draw in balance exchanges again. And looking at the individual different exchanges, it looks like that's coming from Coinbase. So you'll see in bottom left that drawdown in Coinbase's balance. I think it's roughly 30,000 coins, but don't quote me on the exact number. Bottom right is Binance. And what you see is that Binance continues to increase in terms of how many coins are on the exchange. So, you're seeing what looks like selling from the East and then buying in the West. Or also some people could consider this kind of a way to gauge, people are moving coins onto Binance for speculative purposes because Binance has leverage and all kinds of, products that you can get, speculative leverage on anything. So you could see it that way as well. But generally, like when you see a lot of selling in Asian hours and then buying in the early morning Eastern hours. So I think that's probably more the explanation, but that's just kind of a theory.
Got it. And then when you look at miner profitability as the last thing here, what are you seeing on that?
Yeah, so, we just had this difficulty adjustment. And so when you have more hash coming on the network, which by the way is slowly recovering, nowhere near where it was a few months ago, but it's been recovering, slowly grinding up. When you have a difficulty adjustment, the miners that are still, that are on the network, they become less profitable. So what you see is in this green line, that's the revenue in Bitcoin terms per hash. And so after the difficulty adjustment, whatever, 2 days ago, you saw a drop down in that. But yeah, hash is coming back up, which is a good sign as well.
Got it.
And so like this, it makes sense why miners have been holding their coins, because they've been more profitable lately, right? And so I'm curious if maybe we start to see a little bit of miners trimming their holdings because they'll be less profitable over the coming weeks, but they still are way more profitable than they were even 2 months ago. But as that hash starts to come back on, the miners are competing more so for the same amount of block reward. Then you're going to see that the revenue per hash go down.
If you had to kind of summarize how you're feeling right now, bearish, neutral, bullish, how do you think of yourself right now?
Yeah, I'm leaning kind of neutral to bullish because we had an uptick in the liquid supply shock ratio. And then also, like I mentioned, some of those coins moving back off of Coinbase, which sometimes it could take a few days for the heuristics to update. So wouldn't be like 100% solidified on that. But over the next couple of days, we'll get confirmation to see if it sticks or if, that trend continues. But as of right now, I'm leaning, at least short-term bullish for sure. Just the only thing that's really concerning me is the transactional activity. It is really low relative to what you usually see in a bull market. But some people say perhaps that's just like a following factor. You see the price increase and then the transactional activity follows. But we did just have a big move over the last couple of weeks, so I would be expecting more follow through in that. So something definitely to keep an eye on over the next couple of weeks.
Got it. Joe, John, you guys got any questions?
Yeah, I guess, well, my question would be around just some of the metrics that you look at, right? And I think most people expect, kind of based off of your evidence that you presented on chain and some of the other stuff going around, that the price is going to appreciate here over the next few months. Some people think more rapidly than others, but I think everyone kind of generally understands that's invested, it's going to appreciate. Do the metrics change, and like what metrics do you look at as we start accelerating and as we start getting the price starts accelerating towards 100 and all these other numbers? Do those change, or do you look at the same metrics?
No, yeah, it's a great question. Like the way I think about it is, on-chain is just a toolbox. And so, for different circumstances, you use different metrics. For example, like, 2 months ago, I was looking really heavily at what miners were doing because of the Chinese miner migration, and we had really low volume. So, it didn't take as much sell pressure to move the market at the time. So seeing some of that sell pressure for miners, in my opinion, contributed to some of the downward price pressure that we had. So like, when we get back into a raging bull market, I'm not going to be looking at what miners are doing as much, because that sell pressure pretty much just becomes insignificant compared to even like the exchange fees that are being sold onto the market. Although Brian Armstrong did say they're going to put 10% of their profits into buying crypto, so that's a good thing. But anyway, yeah, I would be looking for what's going on in the futures market. I think like for short-term price movements that'll become more prevalent as we probably move up. For now, I think like the futures market is probably just remaining cautious until we get that a solidified move, perhaps over 50K or over the $1 trillion threshold or whatever these traders are looking at. But for now, it looks like the market's mostly spot driven, as we kind of looked at like the OI dominance. So that would be one of the things I'd be looking at as leverage starts to come back in if we get a price move up, because that'll play a bigger role in kind of the market structure.
John?
Will, did you say 85% of the coins are held by whales or bigger entities?
Yeah, so it's 84.5. I just have to be a smartass because of when you're looking at the adjusted supply. But when you're just looking at circulating supply, it's 67.7. Okay. But either way you want to cut it, I mean, the long-term holders own a very large portion of supply. When you're talking about whales, that's another interesting conversation. Like when you plot this out over time, what you see is that whales distribute their coins throughout Bitcoin's history, while retail as a percentage of overall supply increased their holdings. And so, if you had some theoretical Gini coefficient for Bitcoin, it would be moving in a positive direction because you're having that healthy supply distribution over time.
Well, where are we going, man? What do you think happens through the rest of the year? Are you still pretty bullish on a much, much higher price?
Yeah, I'm still after the data updated last night. I'm no longer short-term bearish. I'm leaning more neutral to bullish over the next week or two. Technicals, it looks like we're perhaps setting up for a volatility squeeze here in that kind of same time frame as well. So, looking for that in the short term. In the midterm, I still think we need to get over whatever 50K or the $1 trillion threshold that gives the capital on the sidelines kind of that confirmation. And then from a non-chain perspective, I've talked about like some of my top and bottom price models. The kind of bull market threshold that I'm looking at is right around 60K. So if we did get up there, it'd probably line up right around when we would theoretically break all-time highs, because it's slowly trending up. But if we were to get over that, then I would be targeting, whatever the next part of the models. I think it's like a 95K. So yeah, in the short term though, like watching some of those things we touched on earlier, it is with this data, you kind of just have to take it day to day and watch how it's coming in. It's once again kind of hard to predict several months out, but I think just anecdotally hearing some of these things from people that I know who have some connections in the space and the capital that's supposedly coming in towards the latter half of the year, and just kind of the seasonality of Bitcoin. I think we're still kind of set up for more upside here. Something we touched on many times with broader metrics, just never really reached any kind of overheated euphoric zone. Kind of resembles a lot of stuff in 2013 where you kind of ran up about halfway and then came back down and then went up and reached those kind of euphoric, blow off top levels in some of these macro metrics. So watching some of those things. Also, one other thing we didn't touch on, which is just kind of a side note, the percentage of futures that are margined by stable coins versus Bitcoin. So like this has been an interesting trend that you've seen since May 19th, where now you're seeing a lot of traders preferring to use stable coins as margin instead of Bitcoin, which kind of makes sense because a lot of traders got wrecked on May 19th, and it seems like now they're being a bit more cautious. If you just think about it, right, like if you're margin with Bitcoin when the price starts going up, well, not only is the price of the asset that you're betting on going up, but also the margin, right? So like if you're betting that Bitcoin's going to go up, you're long Bitcoin and you're margin with Bitcoin. Well, Bitcoin's price is going up, so your P&L is going up, but also the margin of that position is going up. So it creates kind of this reflexivity up, but then also on the way back down, it can be bad because your collateral is going down in value. I mean, in tandem with your P&L. So it can kind of create this convexity on the way down and kind of accelerate moves down. And that's kind of, I suspect, played a role in that drawdown that we had in early May. So the good part of seeing these stablecoin margin futures is in theory, they're more susceptible to getting squeezed. Shorts are more susceptible to getting squeezed because, right, like if you're short and you're margin with Bitcoin, and the price starts to go up, yeah, like the trade is going against you, but also your collateral is increasing, right? Because you're margin with Bitcoin and the price of Bitcoin is going up. So the fact that they're margin with stable coins takes away that kind of like double dipping you get, where if you're short, and the trade starts to go against you, you're still you're still benefiting partially because your collateral is going up, so you're not as suspected to getting squeezed. So yeah, like I think seeing like an increase in stablecoin margin futures is somewhat bullish in theory, because you have people that are more susceptible to getting squeezed than normal, if that makes sense.
It makes a ton of sense. And I think this all goes back to like the on-chain metrics don't lie. And also what's really fascinating is you saw some metrics change, but you actually waited a couple of days to understand how they were going to play out. And so it's not something that you can necessarily trade on immediately, because you could get faked out by kind of the real-time nature of it. But if you understand the right cadence of how to internalize this stuff, synthesize it, allow for enough time to really have confirmation in a trend change or not, then you're able to apply this stuff and understand where we are in cycles, both in the short and long term.
Yeah, 100%. Like if you're using like exchange flows and you're tracking that intraday, like you're going to drive yourself crazy. Well, the heuristics, they're not perfect, right? So sometimes it takes a few days for them to update. And, I think if you're using this stuff on like some kind of like you're day trading off of it, I mean, you're just kind of setting yourself up to get wrecked. Like you just said, it's best used, over a, week to 2 week kind of time frame. And especially with the exchange balance stuff and some of the entity labeling, you need to wait at least a few days to kind of wait for that stuff to update and also see if it's a trend. Because you can drive yourself crazy. One day, the exchange balances go down, the next day it updates and it's up. So that's like, you need to wait at least towards the end of the week, to see is there a trend. Like, when I sent out the letter Tuesday that exchange flows were increasing, that was like a week-long trend that they had been moving up. So I felt confident in putting that out. But like this uptick, this downtick in exchange balances from Coinbase yesterday, I'm still not fully confident in that, and that's why I'm like a little bit hesitant to be bullish. Although the data in itself, like the downtick in exchange flows and the uptick in liquid supply ratio, that is bullish, but I'm waiting a day or two, to kind of see if those heuristics kind of filter some of that out. But yeah, definitely needs to be used in cadence, like you said.
Got it. When you start to think about this weekend, forget Bitcoin for a second. Are we partying this weekend? What's going on with school?
Yeah, bro, it's syllabus week, so no one's been doing any school stuff this week. I'm sure everybody's ready to have some fun, but stay safe out there. Hopefully nobody gets COVID, but aside from that, I'm ready to have some fun this weekend.
Let's go. Will back in college. I love it, man. All right, listen, thank you so much for doing this. What is Twitter? Where do we want to send people? And then they can find the newsletter in your Twitter bio.
Yeah, sure. Thanks for plugging me in as always, man. I'm on Twitter at WClemente. I'm at 199.1. So if you guys could pump me over 200 this weekend.
Wait. You're right now at 199?
Yeah.
Oh, hold on a second. Hold on.
You got to get me right, Pomp.
This is what we're going to do right now. Ready? So I just put in the chat, everyone, his Twitter account. Go follow him. And then let's do this. Ready? I'm going to, man, I can't believe I just got tricked into doing this, but are you ready? The young on-chain wizard, Will Clemente, is at 199,000 followers. Bet you all can't push him over 200K before the end of the day. Let's see, is this gonna work? Go follow at Will Clemente. All right, let's see. I just tweeted it. I didn't even spell check or anything, so if I spelled anything wrong, whatever.
Appreciate you, man.
Let's see what happens. Well, if you get to 200K, then the next stop is 1 million. So perfect. You'll be ready to rock and roll. All right.
There's one thing you taught me, Pomp, that's to think big. So.
Keep going, man. You're doing a great job. All right, we'll see if we can get you over 200K before the end of the day. And I appreciate you coming on. We'll see you on next Friday. Don't have too much fun this weekend.
Yes, sir. I'll do my best. And you guys take it easy. Thanks for having me on.
Thanks, Will.
All right, see you, buddy.
See you guys.
What's up, guys? Bang, bang. Thanks so much for watching the Best Business Show today. If we're going to be the best business show, we obviously need the best partner. That's why the exclusive sponsor of the Best Business Show is SoFi. They're an all-in-one platform that allows you to invest in all kinds of different assets, including stocks, ETFs, crypto, IPOs, and they even have an automated investing function, if that's your thing. So before we start getting after it again, make sure that you go download SoFi, you get an invest account, and when you make your first crypto trade, regardless of what you buy, they'll give you $10 in Bitcoin for free. It's that simple. Head on over to SoFi.com/pomp to get started today. Thanks so much for watching, and I hope that you come back and watch more of the Best Business Show tomorrow.